We should remember that the Great Depression in the U.S. was followed by a second recession in 1937 and 38 that derailed the world's recovery and prolonged the crisis. So if the European crisis metastasizes, or any other crisis around the world, it could create a new global financial crisis with implications as grave as the U.S. originated crisis 2 years ago. So for America, a weak euro also means something else. It could mean a rising dollar. That in turn means a rising U.S. trade deficit, which will not help America's economy rebound. If the EU, still America's biggest trading partner, should falter, the consequences here would be palpable. That's why Europe and America need to work together to say enough is enough to these speculators who only place value on immediate returns with utter disregard for the consequences of the larger economic system, not to mention the human consequences of lost jobs, foreclosed homes, and decimated pensions. These market manipulations, which were at the heart of the banking system's collapse, are still legal practice. So it's hard to fathom that we have allowed this to continue after what we went through. It is common sense enforced by insurance regulators that a person is not allowed to buy fire insurance on his neighbor's house and then burn it down to collect on that insurance. Yet that is exactly what is done in the market for credit default swaps. This malaise has led banks to foreclose on the homes of millions of Americans, but this malaise now haunts not only Greece, but all of us. But if Europe and America jointly step in and shore up global financial regulation and finally ensure enforcement of these regulations, we can curtail such activities. And it is an encouraging sign that the American authorities have ordered some speculators not to destroy records of their trading in euros. And I would encourage U.S. authorities to continue these investigations. Since the 1980s, we have witnessed a succession of global financial crises, the Third World debt collapse, the U.S. savings and loan debacle, the Asian financial crisis, the high-tech and housing bubbles, and now the worst global recession since 1930s. Globalization, which promised so much and opened so many doors to those of us with the good fortune of advanced educations and careers, has also brought new inequalities and new risks. So this crisis is an opportunity to correct many of the excesses of the globalization. It calls for deep structural changes to our global institutions, to our system of global governance. At the G20 in Copenhagen and at the meeting in Copenhagen for climate change, we did fall short of our citizens' expectations. We fell short of our own rhetoric. So we can't afford to squander another opportunity to make the critical changes that our current reality demands. This crisis should be an opportunity for decisive and collective action, for regulation, which is urgently required if global economic growth is to be sustainable. We need global coordination of monetary policies, and if we let market forces alone dictate the terms, our economic recovery will almost certainly slip into reverse.